So just wanted to kind of run through all the things that are on the homeowners policy. There is quite a bit, so this will be separated over the next couple episodes for you, but just wanted to run through them. So the first one we're going to start with is the types of plans for homeowners. The first one's going to be what they call an ACV, or an actual cash value policy. This means there's a set amount for the house. So, for example, let's say $200,000, but there is not it is not replacement cost. Okay, so this one here can vary. Let's say it's $200,000, and it took $210,000 if they had to totally rebuild your house. This is going to be then they're going to ask you, how would you like to pay for the rest in order to finish the house up. So this is a big difference between that and replacement cost. A replacement cost policy it's set to replace the cost of the home if it had to be rebuilt. So there's going to be two huge differences there, and there is going to be a price difference. Your actual cash value policy is definitely going to be less expensive, but it does not cover near the things that a replacement cost value policy will cover. The second part I want to get into, that's kind of the policies, and then we can kind of run down what coverages mean. So the first one's going to be your dwelling amount. Okay, so that's going to be the estimated cost to rebuild the house. Now, with price of materials and labor changing all the time, a lot of times this does go up, maybe not every year, but every other year. It does get a little bit more expensive. So when your renewal comes, you will see typically, like if it was $300,000 to rebuild the house last year, it might be $310,000, roughly a 3%. Materials and labor typically go up somewhere in the 2 to 4 or 5% range. So somewhere in there, unless there was something else going on, or age of the house got a little bit older, or upgrades, things of that nature could cause the dwelling difference. The next part is going to be what they call coverage B. It's called separate structures. So this is going to be anything detached from the house, whether it be separate living quarters. It could be separate shed, garage, anything that's detached from the house. I will tell you this, there is not an option for zero. Typically in a homeowner's policy, separate structures is typically going to be at a minimum of 5%. Most of the time you're going to see 10%, but it can be a minimum of 5% of the dwelling amount. Coverage C is going to be personal property. Now, there are a couple different differences on this one. So personal property is going to be if you took the house, turned it upside down, shook it out, what falls out is going to be your personal property. Okay, so this could be, it's going to be clothing, obviously, furniture, TVs, computers, whatever it may be. Okay, so anything that you own personally, musical equipment, all kinds of different stuff. So this is going to be there are two differences though when it comes to personal property. There's replacement cost and actual cash value. The difference is this: it's just like on the house when we talked about the dwelling amount. Actual cash value is going to be let's say you list out 95 different things. They're going to go through and price out what the value of that is individually. So for example, if the couch you bought, 10 years ago for $5,000, now might be worth 20% of that might be worth $1,000. Replacement cost means replacement cost. So if that $5,000 couch, even though it's 10 years old, costs $5,500 now, that's what the value of that is $5,500. If you had a total loss of everything, basically it works like this. You would have to itemize out so everything that you owned, and then they will put what the cost to replace that or the actual cash value, and then cut a check according to that. So let's say you had $400,000 worth of personal property coverage and $425,000 worth of stuff after they replaced everything out. Then they're going to cut a check for the $400,000 in order to have you start shopping for the things again. Okay, so that's the difference on the personal property, or what they call coverage C. Coverage D is going to be loss of use. A lot of people don't look at this one as much as they probably should, but this is going to be the amount the insurance company will pay if the house is uninhabitable, whether it be a total loss, partial loss, whatever it may be, but the house is not, you're not able to live in the house. That's the amount the insurance company is going to cut, that will cut total. So for example, typically it's going to fall in that 20 to 30% range. If you have a $400,000 dwelling, you probably have $80,000 or $120,000 loss of use. Now, there also can be time restrictions on it, 12 or 24 months typically. This is important on where you live. If they cannot rebuild a house in 12 months where you live, make sure you have at least 24 months worth of coverage if it's going to take a couple years to rebuild a home. Also, loss of use is during that time. If you only have $40,000 loss of use, it's hard for the insurance company to find you somewhere suitable to live for 24 months for $40,000, as that's less than $2,000 a month. So something big to make sure you check into. I mean, we always hope nothing ever happens, but if it does, we want to make sure enough money and time are in that account in order to make sure that you have ample place to live and that we're paying for it, not you. So that way you're not paying for the mortgage still and that as well. The next one's going to be a big one. This is personal liability. This is your getting sued account basically. So if you were to get sued, your homeowner's policy will pay this amount of dollars. On a lot of policies, you're going to see probably 300,000. There's a lot more personal liability available, 500, a million. With farmers, you can even get $2 million before you get into umbrella. And personal liability on the home is pretty inexpensive, especially when compared to car. So this is something definitely you want to make sure you take a look at. The next one's going to be guest medical, and that can range typically from anywhere from $1,000 to $5,000. If somebody was to come out, let's say you had a friend over, they tripped, fell, or they were helping cook dinner and cut their finger, that's something to keep in mind on that one as well. That's where your guest medical would fall into. So you can't get, like, typically it's anywhere between $1,000 and $5,000 is what you're looking at on guest medical. So those are going to be your A through basically F coverages on your homeowner's policy. On the next episode, we will be going through some of the other little smaller intricacies on the homeowner's policy that you can get as well. So I wanted to thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever platform you're listening on, I'd greatly appreciate it, whether it be Apple, Google, Stitcher, Spotify, iHeartRadio, or any of the other great platforms. I greatly appreciate it, and I look forward to seeing you on the next episode.